to stray too far away from real estate, Nigel, to cement now.
Well, that's right. Let's focus on cement. Earlier this month, the West Bengal government, they invoked the incentives for cement players. How does this development impact various businesses? What's pricing, demand trends as well? To discuss this and more, we're joined by Mr. Sandip Ghose, the Managing Director and CEO at Birla Corp. Hi, Mr. Sandip. Good morning. Thanks a lot for joining in, sir. Let's talk about the good news first with regard to the green signal, with regard to that limestone mine that you'll have got. How does it help you all in terms of visibility? And with your current limestone reserves, how much can you expand capacity organically?
See, Nigel, there is not much of a change. We don't change our strategy quarter to quarter. And I thought that's something you and the market should give us credit for, because we have stated a strategy and we, stick to it, and that's stay on course. And that's been, so this particular, mining thing, don't see that in isolation, this acquisition. These are all part of our longer term strategy in terms of protecting our place in securing our existing markets and in due course making organic growth. So this is nothing I would look at immediately. This is part of a large continuum, and no dramatic change because of this one particular auction bid.
All right, got that. So that's out of the way, but it's a step in the right direction because your raw material gets secured. So that's good news, I guess, from a longer-term standpoint.
That's the point to note, Nigel. We had indicated to the market that after consolidating, getting ourselves to a certain place, then we will look at new expansion, whether it is brownfield, greenfield, and expanding. And our objective is to secure our core markets over there in value terms, and then also expand in our adjacent or the secondary markets. And that is the direction we are moving, and in line with the guidance which you provided consistently.
Okay, all right. What about these incentives, the issue that's crept up in the West Bengal government? What's your comment on that? And were you all factoring in that in, or you all were not factoring in the first place, so it doesn't change things big time for you all?
See, we've been waiting for it for a long time. We have been, nobody can blame us on patience. And so we are patient also to see, because we are not the only people affected. There are a lot of people with much larger stakes have been affected. So I don't think it's played out yet, or we have heard the last word on it yet. So we are also observing the situation and seeing how it progresses and what are the options. So right now we are not particularly, rattled by this particular development.
And you don't think it'll have a contagion impact? If I remember correctly, I think on a yearly basis, your incentives are to the tune of around 100 crores, right?
See, this is particularly only you're talking about the West Bengal. West Bengal, our incentives had ended long time back. So this is all pertaining to the past.
Okay, all right. But you don't believe that it could have a risk on other states as well, right? A contagion impact?
I don't see that happening. This is very exceptional. And all other states, I think they have been pretty good at meeting their incentive commitments.
All right. For the industry, I wanted to understand, how do you read things, because you have exposure to various parts, central, north, parts of east as well as west. How are the demand trends? There was some kind of softness. I'm looking at a DAM Capital note earlier this morning, and they are suggesting that demand hasn't been that great because, you had an alteration with Pakistan. There was some delay in terms of spends. But how do you read the demand situation? And also, what about pricing? The hope is that FY26 will be a far better year for cement prices. Do you believe so?
See, FY25 was a washout.
Yes.
That's a very abnormal year. So obviously that cannot contain. Now, when you talk of prices, I'm not the one who really looks at a very bullish situation. I think a nominal increase in prices, if it sustains through the year, that'll be good for the industry. We had a fairly good exit point, and if somewhat an improvement over that, if we continue to do without any major slides in this next 2 quarters, then I think the industry will be on a good footing.
What about the JP Cement asset? You have already laid out your plan to go from around 20 million tons to around 28 million tons. And the capex as well, you have already outlined around 4,300 crores approximately. There's a JP Cement, that there have been bids that have been invited. Are you part of the bidding process? Have you submitted a bid?
We are not at all part of the bidding process. We haven't, that's far too big, far too complex for a company of our size to look at. And I think it is for the big boys, big players, because it's coming as a composite, offer. So somebody will have to have the ability to unravel all parts of it, and that's not really our cup of tea.
You're doing organic expansion around $80 per ton, roughly $80 to $85 per ton. At what kind of pricing would it make you interested in an inorganic opportunity? Because the problem is for organic, it still takes a couple of years. For inorganic, it could be relatively faster, though you may have to pay a bit of a premium. So your thoughts on that?
I don't see too many inorganic opportunities coming our way, Nigel, to be honest, because it has to have a clear fit for us in our relevant geographies. And I don't see anything coming their way. And right now, it's because we are committed to the brownfield expansion, etc. We cannot abandon it at this juncture. So we'll have to be, if something really, really attractive comes, just like the way Reliance came a few years back, we may have to look at some innovative solution. But right now, I don't think that's taking up too much of our mind space.
I recall that big breaking announcement came in post-market hours. It caught people by surprise. Anyway, let's focus on this year then. FY26, as you said, nothing much has changed. But in terms of an outlook, both in terms of volumes, industry, I think people are working with mid-single digit to high single-digit growth. How much will your company grow in terms of volumes, as well as EBITDA per ton? Last year was a washout, but the past quarter was very, very good in terms of an EBITDA per ton. What kind of a run rate will you maintain?
Nigel, I don't have to repeat anything within a month. You spoke to our CFO less than a month ago, so our projections have not changed, and that's what I told you. So we are, in terms of growth rate, the market we're expecting, as you said, 7 to 8% growth, and that's what we will also grow in terms of volumes. In terms of EBITDA, I would not comment at this juncture.
Got it. Thanks a lot, sir, for joining in and giving us all of those details on terms of a broad outlook on the cement space as well as for your company. Appreciate you speaking to us here on CNBC-TV18.
Thanks so much.